So almost 58,000 points
Yes,
on the day. I mean, it was a day when we heard that the US-China trade dispute was almost 90% resolved. Was that the main driver?
Yes, that was the main driver. And obviously, as you mentioned, the positive carryover from Moody's not doing anything. But it was really this 90% story. Now, 90% is not 100. And unfortunately, with President Trump, you never know what can still happen into the future. But as it stands now, it's very good news because this was one of the things that was seriously worrying the markets domestically and internationally towards the end of last year.
And when it is testament that this trade dispute between these powerhouses globally really does have a hold on the market globally.
Yes, it does. And so far this year, our market's up 14%. Overseas markets are up about the same.
Yep.
At the end of last year, we were worried about two things, rising interest rates and trade war. Now, rising interest rates in America, by and large, been put to bed now, and this is more positive news on the trade war side, so we've seen the markets rallying strongly.
First quarter for the JSE, I mean, it's been the highest in 12 years. I mean, that's good news. Despite the fact that we've seen retail shares doing so badly in the first 3 months of the year. So I suppose the impetus is coming from mining, is it?
It is from mining and international shares, but understand that if you take a positive outlook on South Africa going forward, the retailers and the banks can do extremely well because they are so cheap, because they've done so badly. So, if you think that we'll get through the election, things will work out well, the reforms will continue, sentiment will change, we don't go junk status, these shares can actually outperform quite strongly. But so far this year, they have clearly come under pressure.
We were talking about the first quarter and the fact that we've done so well. One of the big losers was Aspen in the first quarter. I mean, riddled with debt issues, and then it has that milk formula business sale. But I see today saying that, we're close to a deal being rounded off in the next few weeks, and that saw Aspen actually rise. We saw that graphic earlier.
Yeah, about 5 or 6%,
yeah.
Look, Aspen's went on a global spree. They spent a lot of money buying drugs that had come off patent, buying distribution agreements, investing a lot in production of generics and some patent medicines, and they got too much debt. Now, a year ago, the milk formula business in China was their shining star. This is what they were basing almost the future of the company on. Then the next thing, they're selling it because they have to settle debt. So the market said, well, okay, if you've got to settle debt, I suppose you can only sell your best asset because that's the one people want to buy.
Yep.
And then when they announced they gave us a market update, call it 2-3 months ago, they said the money's not here yet, and the market was expecting the money to be in. Now today they said they're a step closer. There's apparently just some regulatory issues they've got to sort out. But of course, even when that money comes in, it's still not enough to get their debt down to a more acceptable level. And that's why you've seen the share price punished as much as what it has been punished. Not just recently, it's been going down for a long time.
Yeah, we've seen that. EOH shares dipping today below 10 rand. I think this was because the first time this happened.
Yes.
I mean, it said investigations into its dealings with the state now will be wrapped up by the end of May. But it hasn't been a good time for EOH, has it?
No, it's down from 150 to 10 rand.
Yeah.
I mean, that's a massive fall. Look, there are still good businesses in EOH. There's still money coming in the door every single day. But until they get to the bottom of these allegations about impropriety and fraud and corruptions with the state, because the state is one of their biggest clients, then the share price isn't going anywhere. And of course, Microsoft, as we well know, has withdrawn 2 agreements they had because they don't want to be associated with a company that's done dodgy deals.
And that's a hefty
now, there's
amount.
New management there. They're going to split EOH. As I said, there are still many good businesses there. There's a lot of income that comes in every month from all of these contracts they have, but they have got to get to the bottom of this and disclose it to everyone, take the write-offs in the financial statements that they're clearly going to have to do, and hopefully over time get back the Microsoft contracts and actually go forward. As I said, they've got new management. I think they're working unbelievably hard to try and get to the bottom of this, but it does take time.
Wayne, before you go, what's your reading on this oil price? I mean, what do you think about when you see this touching $70?
Yeah, look, the oil price at 70 is by and large an engineered price because OPEC has pulled back on production and there's problems in Venezuela. We know all of that. US shale can fill up any shortfall, but I don't think surprisingly enough, I don't think anyone wants a $70 oil price. The Arabs don't want that because they know it encourages U.S. shale to come in. And I don't think U.S. shale wants $70 either because it brings in literally more of their own competition. So maybe we'll be lucky and the oil price will settle down 65 to 60 in the not too distant future. Because understand, the price is not high because demand is surging. The price is high because supply is being held back from the market by OPEC.
Yeah, we see that. And of course, it doesn't help with our petrol price either, does it? Wayne, thanks very much indeed for coming in and sharing those insights. That was Wayne McCurrie from FNB Wealth and Investments from South Africa.